various mixed economic reports, in particular released yesterday. As expected, the quarterly report by American high-tech giant Nvidia propelled a rally across global stock markets. Meanwhile, the Federal Reserve minutes and some macroeconomic reports are taking a back seat amid the AI euphoria among stock investors. Now let's discuss what new clues investors have found to decide on their further trading decisions. For example, the strong quarterly report by Nvidia aroused with investors' interest in semiconductors and their manufacturers. As a result, today the Nikkei stock exchange index, which tracks the dynamics of 225 leading Japanese companies, updated its historical high. The index closed the Asian session on Thursday at 39,253 points. The previous Nikkei record was set in December 1989 at 38,957 points. The surge in the market quotes on the Tokyo Stock Exchange even became the reason for a statement from the Japanese Ministry of Finance. The speech of Finance Minister Shunichi Suzuki was very cautious and contained the well-known mantra that the authorities are closely monitoring the movements of assets in the market. Moreover, the official refused to comment on the current situation. It's already clear that against the backdrop of a weak yen and ultra-soft monetary policy of the central bank, Japan's economy attracts investors with good prospects for exporters. The fresh report on Japan's trade balance confirms this. Exports from Japan jumped by nearly 12% in January, beating market forecast by 9.5% and accelerating from a 9.7% rise in December. This was the strongest increase in shipments since November 2022. The rise was driven by the car manufacturing and the transport equipment sectors. Exports grew the most to China and the United States, India, and Hong Kong. Supplies to Russia dropped sharply by almost 66%. At the same time, business activity in Japan's manufacturing sector unexpectedly shrank to the weakest rate in 3.5 years. Reports published today recorded the January figure at 47.2 points with a growth forecast of 48.2. The biggest decline in production activity since August 2020 occurred not only due to the production cuts. The figures for new orders and exports also fell at the fastest pace. Before we move on to the Eurozone, let's look at the performance of another Asian country. Business sentiment in India has improved to its highest level since December 2022. The manufacturing PMI showed the strongest growth since September last year and surged to 56.7 points. Production volume, sales dynamics, and new orders also went up. Let us remind you that an index value above 50 points indicates a revival of business activity. So, India's economy is gaining momentum. In contrast, Japan has not been able to cross this line since June last year. Moreover, since then, the economic situation has been sliding downhill. And now let's look at how things are going in the Eurozone. According to preliminary estimates, manufacturing activity in the region also fell. In February, the PMI sank to 46.10. Moreover, industrial production volumes have been declining for 11 months straight. New orders have significantly declined. The consensus suggested the region of 46.8. Remarkably, the euro ignored the lower figure and strengthened. Why didn't the lower than expected figure bother investors as at all, and they gave priority to the services PMI. The index not only exceeded the estimated 49 points, but also reached the critical level of 50. Thanks to the strong services PMI, the Eurozone's Composite PMI rose to 48.9, though the region is also a 0.1% uptick, higher than expected, and the uptrend eventually began. The PMIs became the reason for the euro's growth, so the euro-dollar pair even tested the zone above 1.0880. All in all, the euro extended its winning streak the 7th day in a row until the New York session today. During this time, the instrument rebounded from the support level of 1.0700 and also successfully consolidated above 1.0800. Thus, the euro have a chance to break through the next round resistance at 1.0900. After all, the US dollar lost ground, even despite the Federal Reserve's intention to maintain its monetary tightening for a quite a long time. At least the minutes of the January meeting published yesterday reflected the central bank's concerns about premature rate cuts. By the way, the ECB adheres to the same views, even despite recent signs of a cooling inflation. So, in this context, the chances of the euro and the US dollar look roughly equal. At the same time, forecasts for the similar reports on the business activity in the United States, in contrast to Europe, were extremely negative. Hence, euro bulls continued to push the instrument upward until the release of a weekly update on the US unemployment claims. Then, the single European currency lost its leading position and retreated towards a price of 1.0807 euros per dollar. As we can see, a downward movement scenario has developed. It could push the euro even deeper into the bearish zone, towards the support zone of 1.0770 and 1.0700. The US manufacturing PMI climbed to 51.5 in February from a 50.7 in January. The region not only beat forecast of a 50.50, but was also the strongest since September 2022. The US Services PMI, on the contrary, fell to 51.3 points and did not meet market expectations for its growth to the level of 52 points. Accordingly, the US Composite PMI fell to 51.4, although output rose slightly in February. Weak growth in the services sector held back the overall expansion. It would be strange if the US stock market, after yesterday's report from the Nvidia Corporation, today found itself outside the global trend. As we can see, the S&P 500 showed a sharp rally and opened the American session on Thursday by repeating the mid-February record around the level of 5,040 points. Moreover, the US dollar index, which is usually inversely related to the stock market, also grew on a strong initial unemployment claims. The number unexpectedly decreased and thereby confirmed the stability of the American labor market despite elevated interest rates of the Federal Reserve, and the US dollar index rose above 104 points after yesterday's jump to $83.5 due to alarming geopolitics. Brent oil futures moved to a local fall to 82.40. The downward correction occurred due to the expectations of a growth in oil reserves in the United States, and this is exactly what happened. According to the data received, black gold reserves in the United States unexpectedly increased by 7.2 million barrels. Firstly, such an impressive leap requires confirmation. Secondly, there were assumptions that despite the increase in the US oil inventories, fuel volumes could decrease quite significantly. Therefore, the Brent price quickly rebounded to $83 per barrel, and this means that demand is stable. Therefore, there is no reason for lower prices. From the dynamics of changes in inventories, it's clear that all this demand is being satisfied, so there is also no risk of a shortage. Thus, there are no fundamentals for oil prices to rise. In other words, the recent statistics indicate that the current state of affairs will continue, and the only thing that can move the market is political factors. But so far, there are not so many of them to have an impact on oil prices. Technical indicators show traders' interest in long positions. The outlook is bullish. If the Brent price settles above 83.5 during the day, it may rise towards $85 a barrel. You have watched the market review by InstaForex analyst for Thursday, February 22. Subscribe to InstaForex TV channel and we keep you updated on recent market developments. Don't miss our videos. Your feedback is appreciated and see you online tomorrow.